Namaste. Welcome to our channel. Today I'm just going to discuss about the repatriation and surrender of the money of foreign exchange under the FEMA Act itself. Deposits, credits and balances receivable or payable in foreign currency. Then the drafts, travelers checks, etc. expressed in foreign currency but payable in Indian currency for deposits and credits made by the banks outside India but payable in India. That's called the foreign currency. Definition of the foreign currency. As you know that innumerable regulations under the FEMA Act for each and every conditions or each and every things itself. So for the repatriation of the foreign currency, regulation and surrender of foreign currency 2015 says about all the conditions that to be complied for the repatriation of the currency itself. Whatever may be the currency that is outside India by a non-resident or a resident person who is going outside India for any purpose should be repatriated back. Repatriate means it should be get back to India itself. There are certain exemptions which is said in the section 4 of the FEMA Act for which foreign currency that could not be, that is not necessary to be repatriated or that should not be brought to India itself. Those are the foreign currency or the foreign coins of a prescribed limit. Under the FEMA Act, the Reserve Bank has directed this regulation 2015 of the surrender and repatriation. There is a certain limits of the coins that can be holded by a person itself that should not be brought to India itself under the section 8 of the FEMA Act itself. Then the other things that can be exempted, the other thing that is exempted to be not to be repatriated is called the foreign currency possession accounts itself. Foreign currency accounts itself. Indian residents can be hold, I just told in the previous videos itself, Indian residents that can hold the foreign currency account. So that kind of accounts, whatever be the foreign currency kept in that accounts, it should not be repatriated. It can be kept outside India itself. Another exemption that comes is for the foreign currency that is received to a person before 1947 August 15th itself or August 1st itself. If a person just gets a foreign currency before the independence, that can be kept outside India itself. Or if a foreign currency that is got to a person before independence and that is invested somewhere in outside India and some interest or other things that is came to India, that will be exempted and that should not be repatriated. This includes the gift also. If somebody gives a gift to me before the independence from my grandfather and I just kept it outside India and I am accruing an interest for that one, that cannot be kept outside India. Specified accounts or specified currencies or specified limits that is told by the Reserve Bank. Reserve Bank on time to time makes directions that such accounts should not be repatriated or currency should not be repatriated, such limit of currency should not be repatriated. In that way, that can also be kept outside India. Then comes another exemption is that the foreign currency received abroad India. If a foreign currency is received abroad India by me or some other person by way of gift, inheritance, employment, business, or vocation, or a honorarium, etc., that can be kept outside India. That should not be brought to India. That should not be repatriated to India. These are the 5 exemptions that can be. That is the before independence, some currency that is got, foreign coins, currency that is received by the employment, whatever the exemptions that is told by the Reserve Bank from the time to time. Then the foreign currency possession accounts abroad India. These are the 5 things that can be exempted. That should not be repatriated back to India. It is a duty of a person to repatriate the foreign currency that is received outside India without any delay. That is, you should not make an unnecessary delay for that. Whatever be the currency that is told, other than the exemptions that I told, should be repatriated to India or it should be surrendered back to India. So what is a repatriation? Repatriation means, short, in simple English, that is bringing back the foreign currency that is outside India to India itself. As per the FEMA Act, the definition says that it is a selling of a currency, it's a selling of a foreign currency to an authorized dealer. If a person just sells a foreign currency to an authorized dealer, it is just called as, the definition comes under the repatriation itself. Surrender also comes in the same definition itself. Surrender also is the selling of a foreign currency outside India to authorized dealer or to retain the foreign currency with an authorized dealer in a proper account itself. These are the definition of a surrender. So surrender and repatriation are specifically defined under the FEMA Act and the FEMA regulation, repatriation rules 2015 itself. Not only the foreign currency accrued or received to a person or the foreign currency that is person has the right to receive itself. If I have the right to receive a business income or a salary income, not salary should not be brought to India, but whatever be the foreign currency that is the person has a right to receive, that should be repatriated back to India without any delay, or it should not be made under the cover of a curtain itself. That is, it should be brought back to within the account accounts itself. That is the prima facie rule of the FEMA, that respect of the repatriation and surrender of the currency. How can the foreign currency be repatriated to India? The repatriation means, I just told you the definition itself, and the simple meaning is just coming to India itself. So how can it be done? It can be done by way of selling the foreign currency to an authorized dealer. You can sell the foreign currency with the receipt to you to an authorized dealer. Or second thing is that you can retain or hold the foreign currency with an authorized dealer in a proper account, the foreign currency account. You can hold that account itself. Third thing is the manner of repatriation is that it can be used for settling of a debt or liability in a foreign currency. Manner of the repatriation can be sold to an authorized dealer. It can be retained with an authorized dealer, or it can be used for the disposing of a liability. If I have a liability in foreign currency, it can be used for disposing that liability, or it can be squared off, that liability can be squared off. In these three manners only, a manner of repatriation can be done by a person of a foreign currency as per the FEMA Act. There is a time limit for the surrender of the foreign currency itself. If a person receives a foreign currency other than an individual resident itself, then he should surrender that foreign currency to an authorized dealer within 60 days of the receipt of the currency, other than the foreign travel itself. Other than the foreign travel, he should have surrendered that foreign currency within 16 days. This is exempted for the individual resident itself. In case of a traveler's checks or drafts or such kinds of things which can be received for a foreign traveler, it should be the unspent foreign currency should be returned. The unspent foreign currency should be returned to the authorized dealer within 180 days, or the cash or the foreign currency, that unspent foreign currency in a foreign travel, should be returned back to authorized dealer within 90 days of the receipt. So 60 days is the normal limit. Then in case of travel, etc., cash or foreign currency should be returned back within 90 days. In foreign travelers checks, etc., should be returned back. Unspent amount should be returned back to the authorized dealer within 180 days itself also. So 180 days is the maximum days that can be returned a foreign currency. And this regulation, this 2015 regulation of repatriation and surrender, is not at all applicable for the Nepal and Bhutan itself. So whatever the foreign currency can be brought freely from the Nepal and Bhutan, or you can also take back that thing also. There is no kind of regulation. So unspent amount can be, there is no required for the repatriation of the foreign currency. So the Nepal and Bhutan, the foreign currency can be brought back to India without any limit itself. Foreign currency is bringing back from Nepal rupee, or the Bhutan currency itself is just bringing back to India, or it is kept in the Nepal or Bhutan itself. There is no requirement for the repatriation of itself. It is said in the separately because it is a landlocked country with India, and India is having a good relationship with the Nepal and Bhutan itself. The rest of all the things, the repatriation rules applies. The 2015 repatriation rules applies, and the Section 8 of the FEMA Act applies. It should be returned back to India in a maximum time period of 180 days. That is for the travelers itself. The unspent amount. The other things, it is 60 days it will be returned. All the amount that is received outside India should be repatriated back or surrendered to an authorized dealer as per the FEMA Act itself. Thank you for watching my video. Subscribe my video. Give me more and more likes in the video itself, and send it to your friends, etc., and subscribe more itself. Once again, Rathish thanking you, signing off.